What's up, guys? Welcome back to the channel. Today we're showing the taxable portfolio. This is a portfolio that I have in Fidelity. I think it's important for you to see because this is a dollar cost average that every single week or every 2 weeks when I get a paycheck, I add some money to these funds. And I just want to show you year to date from 2022 to 2023 how we are doing on the growth of this portfolio. And let's break it down. So let's take a quick look. We have Realty Income O. We have SCHD, which is a dividend ETF. We have FNILX, which is just the S&P 500. And then we have FSPGX, which is a growth fund that focuses like 50% of this portfolio is just in the big magnificent seven of like the Tesla, Microsoft, Apple. We'll go over it. But let's take a quick look. We're going to go through the breakdown. We're going to go through the dividend view, which is up here, and the fund performance just to see how we're doing on the year. But here we go. So Realty Income is something that we added recently. We made a purchase at cost basis at $46.82. So we have $502 invested. And as you can see, we're up 13%. So that was a good buy initially. But we're holding longer term right now. So we have our entry and we got a nice return so far. So we're on the money with that, which is good. As you can see, we're up just $65, 13%. SCHD over the year, we've accumulated 121 shares. We have a total gain loss of 0.69%. So we're still in the green, not much, but we have 8,500 invested right now for a cost basis of $70.65. And this is all dollar cost averaging, which we will break down and go into shortly. Next, you have FNILX, which is the S&P 500. We've been buying this all year, just a little bit at a time. We have almost 6,400 invested right now at a cost basis of $14.65, which, as you can see, the last price, it's trading at 16.11, and we are up almost 10%, 9.99. So not bad. And then we have FSPGX, which we are pretty heavy in. 33% of our portfolio is in these growth fund, and we're up $1,000 at 16% on the year at a cost basis of 24.31. So let's go into it. Let's click on the individual and let's just show you. I think it's good for newer traders to see that you don't need $1 million to invest. As you can see, my total account portfolio is up 1,800 right now, which is 8%, which is the accumulation of all four of these right now. And I will continue to add to these and some more stocks as time goes on, and we think we see some actual discounts. But let's just take a quick look. Let's break it down. Let's go through FSPGX first. All right, so on this, you can see FSPGX. I just bought up all of the purchases I've made, which you can see the date here is acquired, where it shows the date. My last purchase date was October 25th of 2023, where I bought, it looks like, up to $570. So what I want to do is I want to show you, we're going to scroll down, we're going to go back, because you can see here we have all the years, 2023. Let's go to our most, let's see here. Let's see our last date that we did this. Here we go. So right here is 2022, December 15th is when we started to add this position. And you can see here, all I did was put in the cost basis here. I bought at 24.31, and all I did was buy 11 shares, which is not much. That's up $325, which is almost a 15.59% return. So as you can see, dollar cost averaging December 2022, when we had the market selling off, bought a little more on the 16th, and then 2 weeks later, a couple days later. And as you can see, when I had paychecks or had spare money, I made a bunch of purchases in December and January, and then I made one in March, a few in April, and the list goes on and on. But look at the gains. This is just by dollar cost averaging. Almost every single purchase is up. So it just shows you that you don't need to be continuously, like just buy at one stop. Just dollar cost average in, and you can see the percentage of the gains going up, which is really nice. So you can see right here is all the extra that I'm getting paid because of the percentage win. Now let's break down SCHD, because obviously that portfolio is more in the red, but you can see that dollar cost averaging will make it become more even over time. All right, so this is a good example of dollar cost averaging, and I'm still in the green. Not by much, $59 is total gain and loss. But you can see here, I started buying SCHD a little bit later in the game, I started buying it July 6th of 2023, and you can see I have a bunch of red here as my total gains and losses here. And some of my purchases were pretty big as my starting positions. Like I did a $1,700 position into SEHD just to start the account at $71.62, which is down only $11. Not a big deal, but as you can see, look at my cost basis here. This is the average price that you paid for the stock, or the ETF, I should say. I was buying at the 71.6, almost $73 at one point. And this is dividends reinvested as well. And you can see here, I started turning green when I started buying under $71. So, but as you can see, I was buying all the way up in the 73s, 71.6, and then when it started selling off and looking real grim, I started purchasing now down in the 69 to 68 range. And that's what really brought down my cost basis of $70.65, because with the price trading at 71.14, now I'm in the green. But you can see I have a total of 8,500 invested. Now it's up to 8,600. And I'm not planning to sell this. I'm going to be holding this for years. So your mindset has to change when you're doing dollar cost averaging. You want to try to buy when you have red days. You're trying to buy on discounts because you're believing in the fund long term. So that's my mindset. I'm trying to only really purchase when I'm in the red. Now, you're never going to get that. The market trends up over time, so you're going to have to try to just plan it and just try to set alerts and dollar cost average in when you can. But it's always good to at least be buying some chips. I mean, if you could see, I'm only buying like one share at a time sometimes, or 14 shares, or I guess the dividend kicked in here at like 0.54 shares. But just trying to get some shares in there here and there, so then I'm able to just accumulate as much as possible over time and let the dividends work. So this is just a Fidelity analysis of my individual portfolio. And as you can see, it's saying that it gives you just quick little tidbits. It's saying your portfolio doesn't appear too heavily weighted in stocks or bonds or any one company, meaning one stock. And this would reflect an O because it's the only individual stock I own, which is only 2% of the whole entire portfolio. And it shows that my domestic stock, which is United States, is 99% of the portfolio. So I probably could use some, diversification a little bit if I'm trying to look to go that far. But this gives you a good idea of where your percent allocation is if you want just another way to look at it. And then it just shows you what is your Fidelity, shows you like which style. The style just represents the US stock market. And you can click on the sector as well, and you can see that information technology, it gives you a percentage breakdown of the dollar. 26% is in information technology, which is like your NASDAQ type stocks. And then 14% is with the healthcare, and in financials 11%. So it's good to see, what sectors are you really covering, because you want to see if you're actually diversified or not. Right now, this is comfortable. I'll wait for more stocks to go on sale, and then we'll start diversifying this a little bit more. We're sitting on some cash that will transfer over, and we'll add to this account, try to get this much bigger. But it's just going to take time. I decided to just throw the crypto in here as well so you can see it. As you can see in Ethereum, I am up 16.88% so far. I have a total of $1,750 invested, so $300 almost on Ethereum, which is nice. And this is dollar cost averaging too. You can see the different dates from September 20th all the way down to February 11th. Now you have Bitcoin. It looks like Bitcoin dropped a little bit because I thought it was a little bit higher, but I don't really watch it as much because I don't have as much money invested in it. But you can see just in the Bitcoin, I'm up a total of Bitcoin, Ethereum, I'm up almost $1,000, 948. This is super volatile. I have $1,500 invested, and I'm up $652. But as you can see, I just dollar cost averaged into these prices with like 26,000, 30,000, 21,000, 18,000. But it's crazy. Look at that. 18,000 I bought at cost basis. I'm up 92% on it. So it's just very volatile. And you just got to be very careful when you're buying stuff like this, because some of these gains are insane. $92, like 92% I'm up, because I had a $100 investment at $18,991. So Bitcoin and Ethereum, definitely very volatile, but these are dollar cost averaging portfolios, as you can see. So it's good to see that they're both doing well. You got the one taxable account at 24,000, and then the Fidelity over $4,000 right now. So we're going to keep dollar cost averaging. We're going to wait until we get some discounts, and then we'll add some more. If you're looking for a detailed breakdown of FSPGX or FNILX or SEHD, check out my playlist. I have them in a long-term portfolio. I have videos on them breaking down the individual stocks. The ETFs and the index funds, and you can easily see why I chose these as a long-term view. So definitely check out the channel, subscribe, like, and just leave a comment because I definitely like making videos based on what people see.